Moving to Guangzhou, Hong Kong, it is a safety requirement that to remain seated with your seatbelt fastened until the seater sign has reached.
Hi, Eric. Thank you so much for joining us today.
Thank you, David. Glad to be here.
Yeah, great to have you here today. Why don't you start off with telling us a little bit about your background and the journey founding the EXC Capital?
Sure. Well, thank you, David. My name is Eric Solberg. I am the founder and CEO of EXS Capital.
Yep.
Or as we kind of call it, excess capital.
Excess Capital.
The joke is that everybody needs excess capital, particularly in times of crisis like this COVID. So that was our sort of silly joke when we started the firm in 2007. I have been in Asia doing private equity and real estate investment, advisory, investment banking, entrepreneurship, etc., for almost exactly 30 years.
Wow.
I arrived in Hong Kong in 1991 after some time on Wall Street, and I've been here ever since. But actually, even before that, I was East Asian Studies undergrad at Princeton and Harvard on the Japan side. So I spent a lot of time when I was younger learning Japanese and spending every summer in Japan. So
do you speak some Japanese? Still remember? So desu ka? Nihongo harasemasu ka?
I speak a little bit. I've spent so much
Actually, I majored in Japanese literature.
Did you really? Wow, yeah. Fantastic. I was in East Asian Studies and studied Japanese literature.
I never used the Japanese for business.
Well, I used to try. I don't try anymore because I really lived in Hong Kong and Singapore primarily for the past 30 years. But you know, I have a lot of family in Japan. My father actually worked in Japan as a lawyer for 25 years. So my stepmother is Japanese. My younger brother and younger sister are half Japanese. My wife is Chinese, so my kids are half Chinese. So I'm
sounds like you have a more, I mean, your family has a more Asian than American.
I'm pretty dedicated to Asia, and let's just say I'm the last person in my bloodline who will, you know, look this white.
Okay, got you. Yes, so you are the white Asian, in fact.
Yeah, right? This is kind of what my wife thinks of me as. She thinks me as some sort of strange albino Chuchao person. But in any case, I've been out here for a long time, and I've had a very interesting career. I worked for the Hong Kong firm Peregrine during their heyday.
Yes, that is a legendary company.
Yeah,
right?
I worked under Philip Toes and Francis Leung, you know, and worked on the first 9 IPOs out of China. And then in the mid 90s, I went to India just as that market was taking off under then finance minister and later Prime Minister Dr. Mohammed Singh. And was very lucky to do that. I worked in Thailand and around the region during the Asian financial crisis. I had my own firm, built up an e-commerce incubator, one of the largest in Asia in the late 90s and early 2000s. That went sort of sideways when the bubble burst in 2001. And then I was one of the partners that ran Citigroup's global private equity platform called CVCI in the 2000s. And we did a lot of very interesting things. CVCI was one of the largest international private equity groups with about $9 billion totally under management. $9 billion back 15 years ago seemed like a lot of money. It was one of the biggest funds out there in international. Now it seems kind of quaint, right? It seems kind of small or even mid-size, right? But one of the things that we did while I was at CVCI is I, together with a consortium of other investors, including Standard Chartered and Pacific Star, Metro, and so on, we did a very interesting hybrid private equity real estate transaction to found a company called Shui On Land, together with its chairman and sponsor, Mr. Vincent Lowe. And that was sort of a private equity style investment in that, you know, it was a partnership with management. It was at the holding company level. It was a redeemable convertible preferred instrument. We had a shareholders agreement, all of these sort of classic private equity elements to it, but it was into a real estate business. And back then, private equity firms would invest in businesses, but definitely not real estate. And real estate firms would invest in assets, but definitely not businesses. And here was kind of a hybrid, private equity real estate investment.
Yeah, that was actually
into a real estate business backed by the asset.
Yeah, that was actually question I want to ask you.
Sure.
When I look at your company profile, that which you say that the private equity for real estate business,
Yes,
right?
that's
But
right.
real estate, I understand. Even for me, working as a like corporate banker, corporate investor,
Yep.
I did a lot of financing investment in the
Sure.
project equity of real property, right?
Yep.
But is that the business model you are focusing on,
No.
or you're different?
No, we are different. I mean, there are a lot of great firms out there that have, that do private real estate at the asset level, right? So Angelo
Yes.
Gordon and
Yes.
Blackstone and Starwood and Heitman and all, a lot of great firms. I have friends at all of those organizations, and they do a great job of investing directly into the asset level, or maybe they'll do a joint venture with a local developer or something like that. But what we have been doing for a long time, I started off doing this at Citi, and then I liked it so much that I quit Citi in the middle of 2007, which was good timing. And I formed EXS to sort of be dedicated to this strategy. Now, fundamentally, what we think real estate is a very local and very specialized business. And we don't think we ourselves as a foreign group can really compete in Shanghai with the local guys, or in Ho Chi Minh City with the local guys there, we can't do logistics as well as the logistics guys, or data centers as well as the data center guys. So what we do is fundamentally, we are a private equity firm. We invest in companies. We invest in management teams.
Okay.
And we use sort of a classic private equity toolbox. So we will come in and we will either do control deals or joint ventures, or if we're going to take minority stakes, then, which increasingly we do not, then we want, some kind of instrument where it's redeemable, convertible, loans. It's sort of half private equity, private debt. We have a lot of approvals, and we have a lot of features, right, which are really private equity growth capital features that give you, controls and approvals and protections.
Yes. Then my question is that would you like to describe what kind of company are you investing? Typically, what kind of company? Is it a large company who owned a lot of real property asset, are developing a lot of new project again and again, or you are investing in the like a kind of startup who are having the corporate real property development project?
We've done both.
You do both.
It's a great question, David. I mean, essentially, what we do is divided into kind of two areas. What we've done traditionally is invest into up and coming Asian real estate developers. Classic vanilla real estate, the kind of real estate that has helped Hong Kong and Bangkok and Ho Chi Minh and Shanghai grow. Office, retail, residential, right? And a lot of stuff into residential. So we have Shui On Land in Shanghai. We invested into sort of a REIT platform in Japan. We've built up a luxury residential developer in Vietnam. So the joke for a long time among my friends is that EXS is a developer of developers. We would
Yes,
not develop
yes,
the real estate
yeah,
ourselves.
yeah,
We would, the developer would develop the real estate. We would come in and develop the business and capital and investor relations and strategy and structure and partnerships and management team. So we would develop the developer and the developer would develop the real estate. So
yes, yeah,
that was the usual joke.
yeah,
These days, in addition to that, we are also sponsoring and developing specialized platforms, right? And there are other people out there, for example, Warburg Pincus,
yep,
who has been very successful. I have a lot of friends over there. Joe Gagnon, who's now moved over to Hill House, and Jeff Perlman. I have a lot of respect for what they've done. And then they built up a logistics platform or what have you. We've been doing that for a long time as well. And as I had mentioned to you, our favorite platform is something called Stratus Data Centers, right?
yes.
So this is, again, this is not a
Yeah,
geographic.
sounds like a little bit of hybrid between the real property and the real business, right?
You got it.
Yeah.
Exactly. And that
Yeah.
allows us to use sort of that hybrid skill set that we have. We built up
Right.
a team.
Yeah,
of
you
people
understand,
that
your team understand business very well.
we
On top of
understand how to
the
build
real,
businesses and we understand how to build buildings. That's right.
yes, yeah.
So, so we've, in the Stratus Data Center platform, we have teamed up with a expert management team. Our partner, Nigel Clarkson, is the former head of British Telecom's data center business. Our senior advisor, Jared Appleby, used to be the chief operating officer of Digital Realty Trust and chief marketing officer of Equinix. Those are the two largest data center REITs on the planet. Our power guy, Rob Bath, used to work for Amazon and DRT. My partner, Roland Kyle, was one of the founding management members of Keppel DC REIT down here in Singapore. Alex, our chief development officer, used to be the head of the data center practice for JLL across Asia. Steve Kirby used to be the head of the Cushman and Wakefield data center business for Europe. So what Stratus does is it's a specialized management team. It's sponsored and majority owned by EXS. We've kind of built it up ourselves. But it's not exactly a startup. It's been around for 5 years, and we're working on over $1 billion US worth of specific developments right now, and we've got a sort of pipeline of another couple of billion US worth of gross development cost. But again, it's just exactly as you say, David. It's kind of partially a business. We're running a business with an expert management team. But the business of that business is developing data centers, largely for hyperscale data center cloud operators, like all of the big, huge internet names that everybody has heard of, whether it be Alibaba or NTT Data or Google or these types of folks, right?
Yes.
So again, it's still kind of a developer business model. It's just instead of doing luxury residential in Shanghai, we're doing data centers in partnership with these big hyperscale cloud operators in many different cities across Asia and Europe.
Yeah.
So that's fundamentally what we do. We are this weird hybrid private equity real estate combination. And once 12 years ago, we were probably fairly unique. These days, a number of big groups like Blackstone, Warburg Pincus, etc., are doing similar things to what we're doing, like in logistics or healthcare.
I actually I reviewed in my previous life, and then I reviewed many opportunity related to data center, because we are invited as a project lender, because based on cash flow. So I thought it's a
it's a very
especially, I mean, now we are living in the crisis, COVID-19, related to financial crisis, and then this is can survive like a depression and then I mean economic difficulty, right? Economic crisis.
Well, I mean, yes, I mean, a COVID, like any crisis, I mean, a lot of things get hurt, and a few things
Yes,
are very much helped. And
they use more internet, I guess.
yeah, absolutely. I mean, you think about all of the Zoom calls
Right.
that I do every day, that you and I are doing right now, right?
Yeah.
Or you think about all of the Netflix
Yes.
that
Yes.
people are watching, or other online video and streaming, YouTube, etc. You think about, all of the work from home. You think about all the distance
Yes.
learning that my kids were doing when we were in lockdown. Or my wife, who's a yoga teacher, she's giving and getting yoga lessons, online.
Right.
We live in suddenly over the past
Yes.
18 months, we live in a world where video streaming
Yes.
has just exploded. And of
Right.
course, that uses massive, massive amounts
Agree.
of
Agree.
cloud, internet, data center, whatever you want.
I heard that the Zoom actually I mean, compared to the before crisis, they subscribed
Oh, it's got to be
grow
100%.
up by the 3,000%.
Yeah, it's
3,000%.
crazy. It's crazy.
Yeah.
Absolutely.
And then another interesting story I heard related to the COVID-19 related financial crisis, economic crisis. I mean, the shirts and I mean, these clothing sells very well, increase a lot, but
Yep.
the pants and trousers do not sell because the bottomless. Having a gym conference, they don't.
Yeah, well, these are strange times.
Strange time. A lot of strange things happening, right?
Well, that's
Unexpected.
right. And all these people with the video backgrounds like the one you're showing now, and then every once in a while you see somebody's wife or somebody's child sort of rippling across the video background, gets confused.
Right.
Yeah, I think that these are interesting times. And one of the things that we've been looking at, David, over the past year is, because we are a developer of developers, because we're interested in investing with smart management teams into real estate businesses, of course, we've been thinking about, well, what real estate businesses are going to be winners and what are going to be losers, right? And what are going to be winners and losers in the short term, medium term, and long term. And I think, frankly speaking, I think data centers are going to be winners in the short, medium, and long term.
Yeah.
But there's other businesses, like, for example, we've created a new fund here in Singapore, which is called EPIC. And EPIC stands for EXS Property Innovation Concepts. And what we are investing into is new economy real estate businesses. So co-living, co-working, student housing, hostels, more, new and community oriented hospitality models, new and economy, new economy related gym and fitness models, all of these things that COVID and the move to sort of technology and online is changing the real estate world quite dramatically. And in the short term, of course, a lot of these businesses, I mean, co-working, in the short term, COVID is just an absolute disaster.
Yeah.
I mean, in 2018, 17, 18, 19, things like WeWork were absolutely going to the sky. They went to a, pre-IPO valuation, they said, of $47 billion. Now, even before COVID, that started to collapse, right? Because people sort of figured out that the business model might not work quite right. But then COVID comes along, and a lot of these co-working businesses just get kind of wiped out. They've got long leases in grade A buildings, but they've got kind of grade B and grade C tenants who are on very short-term leases. And when all those grade B and grade C tenants decide to work from home, suddenly WeWork is empty, right? I mean, we have our office in a WeWork in Singapore, And we are pretty much the only people left in the WeWork because,
Yeah.
we are a licensed fund manager with the Monetary Authority of Singapore. So we are legally required by our regulator to have a physical space. But all of the entrepreneurs around us, all the startups, I mean, they're just gone. They're all working from home, right?
I can imagine. Yeah.
So what's interesting is that in the short term, I think co-working is screwed, right? But in the medium and long term, I think co-working is going to do fantastically.
Yeah, I totally agree with you. I think that after the situation gets a little bit better with the vaccination, people, I think it will change way of thinking.
Absolutely.
They're looking for some flexibility, right?
Correct.
Then it's like a co-working and co-living, that kind of the new business model or the lifestyle will be more accepted by the people than before crisis, right?
Absolutely right. I mean, that's certainly what I feel.
Right.
And that's what I'm seeing. I was, for example, we had a meeting yesterday with our lawyers here in Singapore, or one of our groups of lawyers. And these lawyers are some of the most expensive lawyers in Singapore. They're very, very good. And they have a beautiful office, which takes a whole floor.
Usually they have a beautiful office and
all
the meeting room, right?
Middle of the CBD, on the waterfront, new building, whole floor, 9th floor.
Huge lobby, right?
Huge lobby, huge boardroom, all the partners, huge offices. And the partner that I was speaking to was saying that globally, this international law firm is talking about reducing their footprint, their office footprint, by 40%.
Yeah, they make a lot of sense.
It does make a lot of sense, but I mean, what is that going to do to portfolios in grade A office? So, you think about short term, grade A office looks okay because all these guys have, 2, 3, 5-year leases. Looks okay for now, right? In the 1 year that we've had COVID, those landlords are not getting hurt too much. And co-working is just trashed because, everybody has very, short 2-month, 3-month, 6-month leases, and they're gone, right? But I think in the long term, in the medium and long term, those things are reversed because I don't, now that I'm used to Zoom calls and I don't really wear ties anymore. And even after COVID, I mean, I probably will not go back. I used to travel 180 days a year, every year for 20 years. I will probably go back to traveling 80 or 90 days a year, right? Because I like it, right? And some things, when you sign a deal, you want to have a drink with your counterparty, or you want to, go to Korea or Japan or China and, meet people face to face for part of the business, to get to know people. When you have a problem, when you sign a deal, those must be really in-person meetings if you can do it. But the rest of the time, I'll tell you, David, I'm doing business this way. Yeah. And I would much rather have the flexibility to either work from home or to work from a small office in co-working, or maybe I don't want to go all the way downtown. Maybe I'll just go to a co-working center that is near my house and have a meeting there, or get, if my kids are too noisy, I'll have a desk there. But I mean, in a world where with a small camera and a laptop and a good pair of headphones like you're wearing now, what, I can put that in a backpack. That's my office.
Right. Yeah, it feels like you are not finance guy or the investment professional. It feels like you are the tech guy, right? You're giving a lectures how we adapt to the new age now.
Well, I'm passionate about what we do, but I mean, in reality, I mean, you make an interesting point, David. I mean, I think that, like a lot of us in life, you kind of go through a trajectory, and, a lot of us in this business, in investment, and whether we'll call private equity, real estate, venture capital, or whatever, you start off as a young man or woman, doing advisory,
Right.
And then you start going into fund management for a while. And then if you're lucky, maybe you have your own fund management business. But to me, the sort of the natural next step after that for myself and for my colleagues and partners has really been to be more of a sponsor, right? To be more, of an entrepreneur and to work with other entrepreneurs. And I really, I look at Blackstone and a fund management business like that, and I think, wow, what a great business. Steve Schwartzman, has done a fantastic job. But then I look at some of the classic Asian businesses. I look at Li Ka-shing, for example, or I look at Ong Beng Seng, right? Or I look at, Dato Tan Sri Kwek Leng Chan in Malaysia, or Dr. Mori, the late Dr. Mori, bless him, in Japan. I look at some of these classic Asian entrepreneurs, and they've been doing private equity for decades, right? They've just been doing it with their own balance sheet.
Yep.
They've been doing it, and they have the same kind of attitudes towards control. I mean, Li Ka-shing is going into new businesses together with expert management teams all throughout his career, right? Whether
Yes.
it was Tom.com or it was, Chung Kong Infrastructure, those are not the original businesses he was in. He saw an opportunity. He either met or found or was pitched or recruited a great expert management team, and he developed a business. So these days, EXS, yes, we are a fully licensed fund manager in Singapore. Yes, we are fully licensed with the Securities and Futures Commission in Hong Kong. We're registered with the Cayman Islands Monetary Authority. We're even licensed as a real estate broker in Hong Kong in case, we're not sure what is a hard asset versus what is a securities transaction, right? But really what we are is we're a very entrepreneurial shop. And what we do is we sponsor these opportunities. We do it in a fund format. We run funds for other people, but we always invest our own money first, and then we let the first round of investors into the opportunity pari passu with us.
Yep.
And then we build it from there. And we're just basically entrepreneurs in kind of a fund management format.
Right.
I found that really enjoyable and satisfying.
Yes.
We work on a smaller number of opportunities. I mean, most fund managers are looking at 20, 30 things at a time. We probably do 4, 5, 6.
So more focused.
More focused.
You don't spray and pray.
No, we try not. It's more of a sniper approach.
Sniper approach. Okay.
As a result, I mean, I'm very proud to tell you, I mean, we always invest our own money first, and sometimes that works, and sometimes it doesn't work as well. We experiment with our own money a little bit, and we don't bring other people's money next, to work next to ours unless we have quite high conviction. But when we have had that high conviction, we have always made money on every single deal for both our investors and our management team. Now, in some ways, I'm cheating because I'll take a risk with my own money that I won't take with other people's money. But I think that in some ways it's a very old school Asian way of doing business.
Yes. Yeah.
So that's how I think of us. I mean, I think of us sort of partly as, Western, very rigorous, good due diligence, good analysis, big financial models, very strict compliance private equity firm, and half as a sort of an entrepreneurial Asian family office.
Yes. Yeah. That's good. Sounds like good balance, right? Asian way, the Western way has its own merit. Yeah,
it's fun, and the one of the interesting thing is when we meet entrepreneurs and we sit down with them and we talk to them about their business, within 5 to 10 minutes, they always say, "Wait a minute, you're not like the other guys. You're one of us. You're a crazy.
Yes.
You're a crazy entrepreneur just like me." And that kind of connection, right, is very important.
Yeah, agree. Agree. So, I mean, I understand I mean, your business model and your
Thank you.
investment focus. And what is the average ticket size usually you are investing?
Well, I mean, in recent years, the average investment that we have led is kind of 100 million US dollars plus. So
Per deal.
per deal.
Wow, that's pretty big.
Yeah. So
how I cannot imagine how big is your fund?
well, we don't run a single fund. We basically put together funds for specific ideas.
Okay.
So for example, our data center platform, that's one fund all by itself.
Okay. I
And
see.
actually it is designed, it's structured as a unit trust here in
Okay.
Singapore.
Yep.
It is pre-structured to list as a REIT
Okay.
here in Singapore as a public REIT.
Yep.
So we've sort of said, well, what do we want to be when we grow up? We want to be a data center REIT like
Yeah.
Equinix or
So
like
very dynamic fund structure. Very dynamic. Yeah.
yeah. So you know, and investors like that, I think. I mean,
Yes.
particularly Asian family offices, we say, look, you're coming, yes, it's a fund format.
Right.
And because it's a fund format, you have certain comforts, right?
Right.
Like we are regulated by the Singapore Monetary Authority of Singapore. We are a licensed fund manager. We are, you know, every director in any corporation has, you know, fiduciary duty. But as a licensed fund manager, we have much stronger,
Right.
you know, fiduciary duty and compliance and regulations on us to take care of our investors than any normal corporate director does, right? So people like that, you know, especially onshore here in Singapore, they really like that the security of a well-regulated fund and a well-licensed fund manager taking care of them. And also, of course, you know, if we structure it as a fund and we're properly running it as a fund manager here in Singapore, we can apply for 13X or 13R, essentially tax incentives, and our fund effectively becomes tax exempt, or,
Okay.
or put more accurately, it's taxed at the very specific rate of 0.0%, which is a nice rate.
Yep.
Again, but you know, people like the fund structure, but they also, particularly Asian families and high net worth individuals, they want to see what they're going into. They don't like blind pool funds as much. So we
yes,
say,
I understand what you mean. Yeah.
we say this Stratus data centers, all it does is data centers. Here's the first 5 or 6 deals we're going to do. You know, we're going to raise 300 million, or we're going to raise 500 million. Each deal is 50 million, 100 million, 250 million per project. And once we're done with the 500 million, we're going to raise another 500 million, and that's going to be the B share class. And then we're going to take all of that as a big pool, and we're going to list it as a REIT, and that's our plan.
Yes. So in terms of analogy, you're running the high-end boutique custom tailored fund management company.
Very much so. That's exactly right. That is exactly what everything we do is custom made. Everything we do is boutique. Everything we do, we invest side by side with our investment partners, and we give them a lot of transparency and a lot of access and a lot of ability to do due diligence with us. And if they want to get their hands dirty, if they want to look at the model, if they want to meet the management team, if they want to visit the site, we really welcome that, because what we find is the more that we allow people to do that, the more likely they are to invest. So, I mean, I told you a little bit about our Epic fund, right? We have just made our first, that fund was just established on Christmas Eve last year. And it's registered with the MAS here in Singapore, and it's oriented towards these new economy real estate businesses. And it is structured in Singapore as what's called a VCC. Have you heard of that?
No. What is that?
VCC is a very new fund structure here in Singapore. It stands for variable capital company. And
Variable
it
capital
gives you a
company.
lot of flexibility, but what we are using it for is it gives people the ability to either come into the Epic fund as like a standard private equity fund at a fund level, and you can give us discretion on a blind pool basis to make the investments for you, and we'll invest all your money and get all your money back, and we don't receive carry or any kind of incentive, right, until we've gotten you all your money back across all the deals. That's
Well,
one
that's
way.
that's a very aggressive and proactive way.
Well, that's normal private equity fund, right?
Okay.
Or alternatively, with the same fees, you can come in deal by deal. Same fund structure, either fund level or project level. Same fees, but if you come in on the fund level, you pay fees across the fund. If you come in on the project, you just pay fees on that one project, right? Fees and carry. So we found that people really like this, because if they want to give us the choice and just say, okay, Eric, you do it, you have a good track record, you and your team, that's fine. But a lot of, again, Asian family offices are like, I don't want to be in this, I really like this, and they want the transparency and they want to be involved, right? So we've just made our first investment in the Epic VCC fund. It's into Asia's leading backpacker hostel business. So this is for 18 to 25-year-olds. They're on their gap year. They go to Siem Reap or Bangkok or Chiang Mai or Gili T or Boracay. These Mad Monkey hostels, and they're a lot of fun. They good bars and good parties and good events and good local tours and good connection with the local culture and sustainability. But this is, again, one of these new economy real estate businesses. It's partially community, it's very flexible, it's totally tech enabled, you can do everything on an app, right? It's the co-working or co-living of hospitality, right?
Okay.
It's kind of co-vacationing, right?
Yep.
And we've taken a small investment in that. It'll end up, the first investment will be only about $5 million. We've put in about $1.5 million of that ourselves, and then we brought in some friends and accredited investors and family offices, and as you can imagine, in the short term, COVID has flattened that business like a pizza.
Yes.
But again, we think in the medium and long term, this kind of,
it's a matter of time, right?
Exactly. We think that there's sort of 200 million 18 to 25-year-old Asians and Australians and Americans and Brits and Europeans that really, really, really want to get out of the house.
Yes.
And where do they want to go? I want to go to the beaches of Thailand or Vietnam or Philippines or Indonesia or Cambodia, and I want to party with other cute people who are 23 years old. I'm 53 years old, so I just get to watch. It's not that fun, but I think that again, it's a question of short term versus medium term versus long term. Short term, this business is a disaster. Medium term, I think it's going to be fine. Long term, if we can use this crisis to consolidate the industry, buy property, build when other people are hurting, I think it's going to be fantastic.
Yes, I agree. Yeah.
So those are the kinds of things we do.
Okay. In terms of geographic market, we didn't go through the interview question, but this is more natural. I think a good way to have a conversation. But in terms of geographic market, do you have any focus?
Well, we think of ourselves as sort of Pan-Asian.
Right.
We have a well-established office in Hong Kong. Our Hong Kong office dates back to 2007. Again, we're fully licensed with the SFC. We've got a great team up there led by Chris Kwan and Kathy Huang and Chris Tai. Kathy's ex-Goldman Sachs. One Chris is ex-Morgan Stanley. The other Chris is ex-JP Morgan. Down here, we have a newer office, which is led by myself and Roland Kyle. Sort of coincidentally, both Roland and I are ex-Citi. So we've got about, 10 people. We're growing pretty fast. We'll probably be 12 to 15 by the end of the year. And then we are the majority owners of Stratus. That is another 10 people. And then, we actually, if you look at the other businesses that we have very significant equity stakes in, it's hundreds of people. So it's, but the top bit, EXS, at the top is is a small group of, very well-trained, very hardworking people. Every single person in my firm has equity in every single deal that we do. And it's run like almost like a Silicon Valley, sort of VC or entrepreneurial firm, right?
Yeah.
Again, sort of half family office, half private equity house.
Yes.
We are branching geographically, particularly in data centers, into Europe as well. And the reason is, again, we're just following our favorite tenants and customers, right? And, we don't think we have a lot of advantage to add to those customers. I mean, Google or Apple or Facebook, these people don't need any help in their home market of the United States, right? They can get tax benefits, and they have, they want to own it themselves in their home markets. But when they're expanding into Europe and when they're expanding into Asia, they don't always want to do all the work. They don't want to do all the property development themselves. So with Stratus, we've started going a bit into Europe. In fact, our two largest projects are actually in Germany. But for the rest of the business, primarily we stick to Asia. We like Japan very much. We like Korea very much. We used to do a tremendous amount in China, but China has become a more challenging investment market for foreigners. And frankly, there's a lot of smart money in China. I mean, it's hard to it's hard to have a competitive advantage.
Yes, agreed.
I mean, I for 20 years, throughout the 90s and the 2000s, I spent 80% of my business life in China, and I considered myself to be kind of a China specialist. But
those days are gone.
Those days are gone, right? I mean,
right.
If I show up in a meeting room in China, the likelihood is that I'm the poorest person in the room. Right. And it's very hard to compete with some of the local big boys in terms of capital and connections, and of course market knowledge.
I mean, I work in the when I work for the Korean bank, I work in some Chinese deal in the 1990s, and then I remember like foreign investor from developed economy, they have a lot of complaint about the market and the investment opportunity and the laws in country, right? Then what I'm trying to say, and then after that, I mean, the market has grown, ecosystem grown very quickly, has become so big. So I think everything is about timing. So even though that they have a lot of problem, you need to find a way to make investment or to grow the business in the early stage emerging market. Otherwise, they need to stay in the developed world. Yeah.
Yeah, that's right. And I mean, I think that China, particularly in terms of real estate and particularly in terms of the internet business, is a very political and regulated business. So, I mean, again, I think that's not an advantage for us. I mean, I think that the markets which are most interesting for us going forward are really Southeast Asia.
Yes.
I mean, Southeast Asia, ASEAN is also 1 billion people. Also huge markets, also fast growing.
Indonesia only 260 million people.
I know. Indonesia is a huge market. Vietnam
almost to 100 million.
Yeah, that's right. And growing, 7% a year. And COVID has
young
not
population
affected Vietnam too much. So our real estate investments there have done very, very well.
Very good.
All of these countries have challenges in terms of, their legal systems, in terms of business ethics, in terms of corruption. And as a real estate investor, sometimes it's hard to get, controlling interests into, actual land. in
Yes.
Vietnam or Thailand or the Philippines or Indonesia. I hope that those governments liberalize a little bit and allow groups like us to own land in the way that Japan or Korea or Hong Kong or Singapore does. I think allowing foreigners to own land is good for the local economy. Nothing to be afraid of. Yeah, that's we'll see how that evolves over time. But in the meantime, although certain aspects of ASEAN, investing in ASEAN are difficult because of the growth, and frankly, because it is difficult, if you can do it well, if you can do it right, then you can make some very interesting returns.
Yeah. Yes. Yes. I agree. Yeah, it sounds like you're very clear about the direction, investment focus, and your focus market in Asia.
We're having a good time.
Yes.
I mean, we think that what we do is very specific. It's quite specialized, and yeah, I mean,
And
so far
then
so good.
also the crisis, with the COVID-19 pandemic, it has a lot of negative impact. At the
Well,
same time, it opened a way for the great new opportunity as well, right?
Well, I mean, one of my friends, the Chinese always say that, crisis and opportunity are kind of
Yeah, Chinese
very
character,
similar
Chinese character.
characters,
Yeah,
right?
yeah, yeah.
But I mean, another sort of American philosopher basically sort of said, you can't let a good crisis go to waste.
Right.
Now, luckily, when we came into COVID, we didn't have anything in retail. We didn't have anything in hospitality. And the markets that we were in, like data centers and Vietnamese real estate and so on, actually have almost benefited from COVID, right?
Yes. Yes.
So
Yeah.
luckily, the things that we had that were existing investments have done fine. And what that has allowed us to do is to focus and to think broadly about, okay, what does COVID mean, right? What does it mean for real estate across Southeast Asia? What does it mean for the global economy? What does it mean for the nature of work, or for the way that people want to live or play or do business? And I think that, I mean, I don't really know what the right comparison is, but I mean, I think COVID is a seminal event in our time. I think it'll be like World War II or like the Vietnamese War.
Bigger than that, in fact. I have
Maybe,
I saw
yeah.
that the statistic even compared the global, I mean the depression 1930s in US, or compared to Second World War, every 200 country is impacted by the COVID-19, and then in terms of size also very massive and long lasting, so much bigger than that.
I mean, if you look at the death toll, for example, in the United States, of about 560,000 people dead last time I looked, which is incredibly sad. That's more than World War I, World War II,
Yes,
Vietnam War. I mean, you really have to
yes.
go back to all of the wars in American history, including the Civil War, which was very, very bloody, to sort of compare to COVID, right?
Yes.
So, I mean, it's on some levels, it's of course very sad, and from a humanist point of view, from a spiritual point of view, obviously, I wish, like everybody else, that doesn't happen. It's caused a big change in my life, and I'm sure in yours, and I'm sure in all of your listeners. But the investment game, you have to play the cards on the table, right?
Yes.
And these are the cards that we've been given, and luckily we came into this situation without a huge 3-star hospitality portfolio or something like that, and without a lot of legacy investments that were hurting us. So we've been able to think very opportunistically and very contrarian about this kind of thing. But again, you think about something about our investment in a Mad Monkey Hostels. This is a business that was doing $10 million a year revenue pre-COVID. During COVID, it's effectively doing zero.
Yes.
What are
yeah,
we doing investing $5 million into a business that has gone down in revenue 100%?
Right. Right.
But I think it's going to go up by 200%. So,
Oh,
you know, you're taking a big risky bet, but if it works, there's going to be a big bounce.
right.
So that, we're having fun with it.
Yeah. Yeah. Sounds good. Yeah.
All
Let
right.
me ask a question, final
Sure.
questions.
Sure.
What can we expect from you and EXS Capital this year? And then what is your vision for your business? Long-term
Well,
vision.
thank you. I mean, I think it is going to be a very important year for us. I think it could be our best year ever, both in terms of the sort of cash that we make from some investments that we're making and some investments we're exiting this year. But it also could be, looking back 5 years from now. I think there's a strong possibility that what we did in 2020 and what we do in 2021 is going to be the most important period in our firm's history in terms of the investments that we make now. So what I hope happens is I hope we continue to grow our excellent team. We have very little turnover. I hope that continues. I hope the core team stays with us. This is really a people-driven business, the nice thing about running your own firm is that you can hire people that you like.
Yep.
So we've been able to put together a great group, and then I think I want to make our investors not only make them money, but make them money in a nice, stable, reasonable way. Again, our strategy has been to make sure that we don't lose money on anything, to protect our downside very carefully. And then every once in a while, one of our investments goes very, very well, and everybody's especially happy. And I think that between our Epic fund and our Stratus data center strategy, I think that there's a strong possibility that we might raise a few $100 million US dollars in 2021 and 2022, and that would put us in a great position to do some further exciting things over the next many years.
Yep. Sounds like a good plan. Good plan.
Well,
Yeah.
it's the plan.
Right. Yeah.
None of our plans ever work, David, exactly the way
I understand. I understand. The life doesn't pan out as a plan,
longer than
right?
we hope, but we usually get there.
But if you have a plan, you
But we do have a
execute
plan.
it, and then if you find something different, you can pivot it, right? If you don't have a plan, if you don't execute, nothing happens.
I always think that it's kind of, life is 2% inspiration, 20% perspiration, and the rest of it is just persistence.
Yeah, persistent.
Don't give up.
Yeah.
So,
That's a popular expression these days. I mean,
that's right.
if you give up and then you fail, if you don't give up, you will make a success someday in the future.
My wife has a great phrase, which is, you've got to survive long enough to succeed.
Right.
I think is really words to live by.
Also, I heard that the people think that a word success is not a good word, because the end of the game, right? Maybe it's a grow is a much better word.
It's a journey. It's a process.
Journey. Yeah, agree. Totally agree. Thank you so much for taking time and then sharing your story on my podcast.
David, it's been an absolute pleasure. Thank you very much for the opportunity to join you.